Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Scott, I thought we had another OC guy, but the other OC, it's the Orange County in Florida, not in California. So He's not in my backyard. He's in yours. Well,
exactly.
Across the state,
exactly.
As backyard as you can get. So he's out of Orlando. So we've got Rob Panepinto, and he's got Govo Ventures, which is really government focused.
Yeah, he's really leaned into, everything that has either works with the government, has a client for the government, or provides a product or service to the government. And, he's got a background, some of his partners in the space, so they understand that really well. And, I was really intrigued by the conversation. There's a lot of government, activity in Florida and even Orlando specifically. So, it's comforting to me as a new Floridian to have a local investor on the podcast, but also investing locally in some of the leading edge tech that's being applied, to government at all levels, not just federal, state, and municipal.
It's interesting. When I went to a couple of your events over the years, especially one of the ones that you had in St. Petersburg, that there were actually quite a few people who specialize in having in local companies within their fund. And this is one of them. And I think that that's really smart. You can have face-to-face, you can check in on them, you can leverage them together. That it's actually really a smart strategy. So I was glad to hear that. But also surprised like you that there was so much going on in the Orlando area that was government based.
Well, yeah, it's funny, Florida has a vast education system. I'm in St. Pete and I can throw a rock and hit probably 20 colleges and universities. Orlando is very much the same. But yeah, obviously when you think Orlando, it's Disney World.
It's all Disney. It's all entertainment, right?
It's all entertainment. But there's so much more. They got University of Central Florida, Rollins College. They've got, the Polytechnic University, which is not very far away. They have a real deep background in education, and that's obviously leads to what they're doing, in the military, in the government, at all levels.
Yeah. Rob Panepinto is an innovator and a civic entrepreneur who's significantly contributed to Orange County, Florida's growth in technology, entrepreneurship, and creativity. He serves as managing partner and chief investment officer for Govo Venture Partners, investing in innovative companies, and is also the CEO of Entrepreneurs in Action, managing a social venture fund. He's deeply engaged in the Florida entrepreneurial ecosystem, and Rob holds various board positions, including co-founder and board chair for the Raleigh Social Enterprise Accelerator. And he was named one of Orlando Business Journal's inaugural Power Players in 2021. So let's hear the interview with Rob Panepinto of Govo Venture Partners.
Hello, everybody. My name is Scott Kelly, the founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And I'm thrilled to have Rob Panepinto of Govo Venture Partners. Rob, welcome to the show.
Thanks for having me, Scott. It's good to see you.
Awesome. We're both smiling because I was trying to make sure I got his name pronounced correctly, and I hope I got it right. But we'll just take Rob for simplicity's sake. So Rob, thanks again for being on the podcast. Before we get into Govo, maybe share a little bit about your personal professional background prior to launching the fund.
Yeah, sure. No, I'm happy to. So, born in New York City, but proudly have lived in Central Florida since the early 90s. So I kind of joke, I feel like I'm one of those early pioneers who figured some things out.
Right. Not the carpetbagger like me. I've been here only 3 years. So.
So I've been here more than 30 years now. And, I know you've spent some time in Florida as well. So it's really been interesting to see the growth of the ecosystem here and really see how early stage companies and investing have grown. And I'm, fortunate to be part of that. The first part of my time here, I was on the founding team of a really interesting story. When I joined it, it was an audio cassette manufacturing company. We made books on tape. I'm going back to the mid 90s. Yeah. A lot of folks listening to this podcast may have never even seen an audio cassette. It's a great entrepreneurial story. We transformed 5 or 6 times. We ultimately got really good and became experts in helping health insurance plans, both from a CRM technology standpoint and a call center standpoint, enroll consumers in individual health insurance plans, both for the under and over 65 market. And we'll talk a little bit more of our thesis later, but it was my first sort of intersection around the role that government can play both positively and negatively in a business, because I can literally tie both our private equity transaction and our sale to changes in federal government healthcare policy. So I was with that company for 18 years. We grew it to when we sold it to United Healthcare to about $250 million and about 5,000 employees. That was in 2011. I stayed for a couple of years after that. And by that time, I'd been pretty involved in the ecosystem in Central Florida. And there was a lot of opportunity to really start to think about what Orlando and Florida could be. Certainly not Silicon Valley, but what we could be from an early stage standpoint. So I was very involved in the community. And so rather than do another startup, I pivoted to trying to help other entrepreneurs and startups. And I did that. I did that through a lot of direct investing by getting involved in some early stage funds. I started a social impact accelerator that I still run called Rally, that invests in that supports early stage for-profit and nonprofit social impact companies. We started a social venture fund around that is now closed, but has had a couple of exits. I was part of the founding board of a group called Starter Studio. I still have a part-time role at the University of Central Florida, helping to grow our business incubation program. Mm-hmm. And at the same time, I got even more broadly involved in the community, which kind of got me, I think, more at the intersection of government and innovation. I actually ran for mayor. I ran for county mayor here in Orange County, which is the major county in the Orlando area, largely around economic development, diversification. And if anyone knows anything about Orlando in particular, it's, we fight with Vegas for being one of the lowest wages economies in the United States, despite having the second largest university in the country throwing out these amazing engineers at UCF. So it's an interesting economy here. And after I lost the race, COVID happened shortly after that, and I had previously met my partner, one of my partners, Jonathan Kilman, when we were on the founding board of Starter Studio. Jonathan is a lawyer and a lobbyist by background, but always around entrepreneurs, trying to figure out how to tackle regulatory environments. He's done a lot of work with the ride-sharing companies, with the telehealth companies, and we launched a business during COVID that was helping early stage disruptive technologies in the disinfection space get to market. And that put us in, a lot of work with regulatory agencies, and a lot of our clients were government. Well, that business, it was interesting. We wondered whether people would sort of change behavior after COVID, and they didn't.
Become less clean?
They didn't. So the business sort of went like this and went like that, which we kind of anticipated might happen. But it led to some interesting conversations between Jonathan and I, where, again, both of us had always been around the intersection of government and innovation. And I had joked with him that as a lobbyist, I know he got paid awfully well, but some of these regulatory changes that he had made for his companies unlocked enormous value to them that he was certainly wasn't achieving in his current role. So there was an interesting premise for the fund there. Especially around a time of where we saw it in COVID and only continued, a lot of change and the real need to modernize government and government technology that to me is only exacerbated over the last 4 or 5 years since COVID. So I sort of gave you both my history and what led up to why we founded Govo. But all of that led up to why we put Govo together in 2022. Added our partner, Brian D'Ambrosio, who's a healthcare executive up in New York, and also 1858 Capital, who's a mid-market M&A and investment bank based here in Orlando, Winter Park.
So let's talk more specifically about Govo. So share the fund's thesis. What industries are you investing in? What stage? Typical check size, and then then I want to share a little bit more about how you choose what investments to make.
Yeah. Yeah, so we invest in early stage companies at the seed to Series A. And for us, that's it's generally post-revenue seed. There's a couple of times where there's been near-term contracts where with an experienced CEO where we felt comfortable with the pipeline. But basically, we're post-revenue seed through Series A. Ideally, we're catching them at the seed, and then the Series A is the follow-on. And the companies need to fit one of two criteria, and sometimes they fit both. So they either need to be in a highly government-regulated industry, or the government is a significant client of theirs. And so, again, sometimes it's It's both. And interestingly, I talked a lot about Florida in my intro. If you look at the innovation growth in Florida, it overlays pretty well with our thesis. I mean, I know, Scott, you're sort of familiar with the I-4 corridor, and you've got the Space Coast to Tampa. You have the Space Coast on the East Coast. You've got MacDill and a lot of defense-oriented work in Tampa. Orlando is actually the home for modeling and simulation for the defense industry. There's been a thriving healthcare and fintech growth here. In South Florida, you have a lot of growth in fintech and property tech. So while we invest nationally, we also do. We have a lot of connectivity in the state of Florida. Really, obviously, have a pulse on what's going on, and so we do look into our own backyard. And so 8 of our 12 current portfolio investments are in Florida. But that's essentially the thesis. We like to lead. So in 9 of our 12 investments, we've been the lead investor. It is interesting to me, particularly around Florida-based funds, how many do not lead. And as you know, a lot of times entrepreneurs, particularly at the early stage, they have a lot of folks who are interested potentially in writing a check, but maybe they're angels or they're high net worth individuals or maybe a smaller family office don't necessarily want or can't do the diligence. And so there may be some money, but it needs a lead. We love to lead because we're pretty active investors. The nature of what we do, which puts us between government and business and innovation, means you've got to be advisors to these companies as much as you are capital resources. So that works better when you're in a lead role, right? Because you tend to be more involved. You know the entrepreneurs better. You're on the boards. So that's basically the thesis and our approach. Some of the industries. About 25% of our portfolio is companies healthcare and healthcare tech and services. Interestingly enough, I'll tell you one thing we don't do, even though it's amongst the most highly regulated things you can do. We will not do pre-FDA. We don't do life sciences that's pre-FDA. It's just not our expertise. We find it a little binary. And there are people that do it really well. We're just not equipped to really be advisors in that case. So most of our healthcare work is tech and services. A lot of GovTech. Again, there's a real need we saw coming out of COVID to modernize government. The example I always use in the state of Florida, for example, I think the unemployment system crashed within 3 days of the PPP program being announced in COVID, right? These systems were just not equipped to handle the way we now do business. And AI's only exacerbated that. And I'll sort of anticipate a question. I think even these the Doge-like efforts at the federal government, and again, I make no political statements around these things, and just we sort of have to react to policy. I think that creates enormous opportunities for innovation and disruption to dislodge long-standing players in the government technology space. So I think it's a great time to be a GovTech. We're very interested in the defense and dual use space, which again I think has another regulatory tailwind. So it's an interesting blend of companies that sort of fit under that broader umbrella of regulated industries and government as a client.
So dealing with the government is a double-edged sword. It's obviously can be an enormous opportunity because they have unlimited access to capital and funding. Correct. But there's a regulatory environment. There's a relationship environment. There's getting in the door and going through a procurement process and all those. So with that in mind, you obviously provide help in that area, but when you're looking at the entrepreneurs to invest in, what about their background makes those items easier or just not as difficult?
Yeah, nothing's easy at the stage of investing we're talking about, right? I mean, of course. So these are very early stage companies. So, well, a couple of things. One, we do an assessment of the if it's a regulatory environment, particularly in flux. We'll do an assessment of just the environment. So, for example, one space that couple of spaces we've sort of shied away from is a lot of the online gaming stuff, right? Highly regulated. Probably some opportunities there, but it's very Byzantine. It's state by state. There are some very big players in it. And so we're a little cautious about an early stage company trying to disrupt that marketplace, even though it theoretically fits our niche, right? Same thing in some of the mobility and transportation types of things. So one, we sort of have our thesis around where regulatory tailwinds and headwinds are. And you have to watch that amongst administrations at all levels of government. 4 years ago, maybe wind energy would have been a great place to be. Maybe not a great, right? Particularly at the federal level, you're probably not going to get a lot of wind energy subsidies right about now. So strategically, we have to take that into the case. At more of the entrepreneur level, look, obviously we're looking for, it's always great when you've got an experienced entrepreneur who really understands the market. Maybe it's their second or third go around. That makes it a lot easier. But that doesn't always happen at the earliest stage. So one of the things so in that case, you're looking for the coachability of the CEO, right? Does he or she know what they don't know? How open are they open for feedback? And then I think we'll also, we definitely assess to ourselves, because again, I do think we see ourselves as much as advisors as we do capital resources. We will also say, can we help? Right? Are these relationships that we have? Is this knowledge we have? Are these places that we feel beyond just writing a check, we can accelerate the growth of the company? So it's kind of a three-pronged approach, Scott. It's a strategic assessment of the regulatory landscape. It's the knowledge of the entrepreneur and their team and our assessment of their likelihood to be able to succeed. And then are we additive? Do we feel like we can be an accelerant? Because if we feel we can't, it's probably less likely we're going to invest, unless some of those other things are so swung the other way.
So you mentioned headwinds and tailwinds. I want to focus on that for a minute, because obviously it's almost in the news every day. Some headwind or tailwind. So talk to me about where you see the headwinds and the tailwinds, and how that's impacting your decision and how and where to invest.
Yeah, and again, we have to kind of watch all the time, and we operate at all. We have some companies that are selling at the municipal and county level, and some that are at the federal, right? And so you have to look some of those nuances. So I will say it is. I'm going to sort of sing Florida's praises a little bit. It is an interesting time to be connected at the federal level, being a Floridian. Mm-hmm. Because a lot of the administration comes from Florida. I mean, it's just right. There's just a lot of connectivity, and there's a lot of connectivity to the northeastern centers of capital, right? Yep. So there's this interesting, as you think about, again, not necessarily not competing with Silicon Valley, because the vast majority of capital continues to go there. But there's this interesting triad of the capital centers of the Northeast, the political center of Washington, and where Florida sits in connectivity to both of those, both because of some migratory patterns down here and just the current administration. So that for us is a huge tailwind in terms of just where we feel like we can support our portfolio companies. Mm-hmm. I mentioned wind energy before. I do think some of the pure green energy plays, unless there's a really strong economic benefit, are a little bit tougher if you're reliant on government subsidies at the federal level, right? And that's just going to be a tougher. That's going to be a tougher play. As I said earlier, we definitely think that innovation around GovTech at all levels of government is a huge tailwind right now, just because of the antiquated nature of it coming out of COVID, and I think a real driver to be more cost effective and innovative because of AI. Right. A lot of pressure, right?
Yeah, AI is definitely playing, a big round in everything, and basically, all levels, especially the government. In fact, there was just a news release a few minutes ago. This will be a few weeks old by the time it airs, but Amazon gave the government $1 trillion coupon for AWS cloud services. So, if the government needs a coupon, they're a little behind the technology 8 ball, but
there's no doubt. And again, I think some of the DOGE pressure around the economics only support. I think it gives entrepreneurs, innovators a real fighting chance.
Yep.
There are both headwinds and tailwinds in healthcare right now. Mm-hmm. It's almost a separate conversation, and so that for some of our portfolio companies, there's some huge tailwinds right now around some of the changes in the recent bill, particularly as it impacts the rural healthcare system, where we think one of our portfolios can be very supportive. There are others where being more focused on the payer system's a little bit difficult in the short term. So it is a little bit all over the map. But I think from a global perspective, the government's going to continue to be an active role in our innovation economy. And again, I make no argument whether that's good or bad, but it is just it is just reality from just where AI is going, where some of the financial pressures are. And so I think it is a very great time to be sort of in the middle of investing, particularly at this early stage, where you can really help these companies grow. And personally, I think there's a lot more. If we're more on the investment side, I think there's a lot more alpha and upside by being at that seed series, A. So,
So let's talk about some of your portfolio companies. To the extent you feel comfortable, let's name some names. Talk about some current, some previous investments that have done well. Maybe talk about some of the investments that you see would have really big upside.
Yeah. So, we closed the fund at the beginning of 2023. Right. So we were raising in 2022, which, by the way, I'm very proud that we did that, because 2022 may have been maybe the worst year to try to raise what was viewed as a first-time fund. It wasn't a good year, right? I've seen some of the Carta data. Like we're in the single digits of firms and companies in the South, funds in the Southeast that launched during that time of a certain size. Right. So, I think it speaks to the thesis, and hopefully it speaks to, people's trust in us. And I know you can ask about sort of who our LPs are in a minute. So, but I say that to say, we're we're a little more than 2.5 years. And our oldest investment is now 2.5 years old. Mm-hmm. We're obviously still deploying capital. So, we made 4 investments in 2023, I think 5 investments in 2024, and then 3 so far this year. So we're still deploying capital, but now a couple of years in, we've had a couple of, we've led a couple of Series A, we've had a couple up rounds. So we're, you start to see the growth in the company. So I'll mention a couple. They're on our website. So it's all, it's all publicly available. Our first investment actually is in a company called Resilient Health, which St. Louis based, so not one of our Florida based companies, and they're in the hybrid care, primary multi-specialty care space. And so by hybrid, I say that there is a telehealth component, but also in-person clinics. So you go into these clinics, they're staffed by medics. The doc is there on the screen with all digitally connected devices. From a clinical outcome standpoint and a net promoter score, and their targets are mainly self-insured employers. Their engagement scores are considerably higher than standard primary care. Their growth has just been outstanding. When we first invested in them, they were only in St. Louis. They're now in 3 markets, about to enter 2 more. They're going to grow 6x between 1/1/25 and 1/1/24 and 1/1/25, which was on top of 5x before that. We led their Series A last year. And we'll see what happens, but they're the one where the one big beautiful bill has some real tailwinds for them, where when the gutting of, or the reductions in Medicare, Medicaid, and some of the changes to the healthcare exchanges create a lot of pressure on smaller hospital systems and rural hospital systems, where partnering with Resilient has some significant upside for them. And we're just, we're seeing that a lot of their growth is coming out of that over the last 6 to 9 months. So, we'll see. It's early, but I think we've already, again, if we're an investment parlance, we've already had an up round there. And I think, we're seeing just business is just going really well. Great experienced team, passionate entrepreneurs. I was actually at their first company summit this week. When you invest in a company 2.5 years ago, and there might have been 6 employees in one location, and now there's 60 employees and they're in 3 going to 5. It's, having been on that journey myself, it's great to, it's so great. It's so great to see that. One of our GovTechs, Jacksonville-based company called Urban SDK, that supports local city and largely cities, counties, but also states around traffic data and intelligence. traffic calming, public safety, actually increasingly moving into disaster recovery. They've just continued to grow remarkably well. They have over 250 clients now throughout the country. We invested in them a little more than 2 years ago. We led their seed extension round. They haven't raised capital since, which has been great. Business has really funded their growth, and they've grown 5 or 6x since our investment. So that's an example of the type of just real growth you could see in the GovTech space. I will say one of the really interesting ones in terms of like where we provide value is we invested in a company. It's actually our third investment. So I ended up giving you our three oldest investments in these examples. It's a company based in Miami. It's called Kind Designs, and they 3D print environmentally friendly seawalls. And I'd encourage anyone to go online and look at some great videos. So you think about a seawall. A seawall generally is a piece of concrete or metal that goes into the ground. And yes, it'll protect against sea rise or storms, but it's in most cases kind of killing any plant life or sea life that's around it. And they're expensive. They're hard to do. They're hard to permit. These are the concrete. They're made out of concrete, but they are it's more environmentally friendly. And they're made with these undulations that allow plant life and algae to grow on it. And then fish are attracted to it. So it kind of restores coral reefs as well. The company has done remarkably well. We're co-investors with a bunch of great investors, including the state fund, the Florida Opportunity Fund, and as well as Mark Cuban. And the CEO is just a wonderful evangelist has a great entrepreneurial story, but a wonderful evangelist for what they're trying to do. So people will go, well, how does that impact you? How does that impact a government fund? Well, what a seawall looks like and what the components of it is regulated at several levels of government.
Right.
And their home base is Miami-Dade County. And you think about Miami-Dade County, if anyone needs more seawalls, it's Miami-Dade County, right? They're sort of the center of sea rise and storms and all those troubles. Well, traditionally, it's been a very difficult market to get permitting approved. There was a long backlog in permitting. We were able to help them work with Miami-Dade County to basically change the rules around how seawalls are permitted. Okay. And the advantages of living seawalls to environmental sustainability and also just cost reductions and efficiency. And so through our work with them just this last July, Miami-Dade County basically rewrote all of the seawall permitting rules in a way that actually makes it better for the entire market, but specifically have some incentives for what needs to happen if you're willing to put in a living seawall, because there are benefits to the community for it, and in return, the homeowner or the developer gets some benefits in terms of reduced costs, reduced permitting requirements, reduced expenses. So there's some examples of kind of
that's awesome.
In the case in all these cases of business growth, but also really how we try to support and help these companies more on the advisory side of what we do.
Fantastic. So let's pivot now to LPs and investors in the current fund. So you said you closed out your fund in 2023. Is that correct?
So we had our first close at the beginning of 23. We raised capital all the way through the summer of 2024. We cut it off then, partially because we were leading the Resilient Series A and didn't want to be in a funky. It was going to be an up round, and that could look very funky from a fund. So we closed it off. So.
Okay. Are you anticipating reopening the fund or starting another fund down the line?
We are likely to start another fund, or we're going to start another fund, and it looks like it's going to be probably early of next year. We have a couple of portfolio companies that are in the process of potentially raising some additional capital right now, and I think we have one more capital call, so I think we want to get past all of that.
Sure.
But I think I would expect in 2026 we'll be raising another fund. Yes.
Okay, so let's talk about the makeup of your current LPs. Who are the type of people that make up your investors in your fund today?
Yeah. So again, we were very fortunate, and I'm very grateful because again, it was not an easy environment. Still not an easy environment to raise capital in, right? I mean, you tell me better. I guess it's marginally better, but it's still not.
That's the genesis of this podcast, is because it is very difficult for earlier stage funds to raise capital. So.
Yeah. So, obviously, it's institutions are going to be hard, right? You're not going to get an institution and those things. So we were very fortunate that several of us are, even though this was the first time we were in a sense partnering together, we built a strong reputation through our previous success. All of us are operators in background. We'd had exits. We were known folks in the community. And so we fortunately had a strong network of high net worth individuals and some small family offices who either knew us or knew of us. And when they saw the thesis and said, oh gosh, these are the perfect, we agree with the thesis and these are the right people to be able to execute that thesis. And so that was our first go around, largely Florida. Right? So for all the folks who say you can't raise capital in Florida, you can't invest capital in Florida, well, I would tell you 80% of our investors are in Florida and 75% of our portfolio companies are in Florida. So we've been able to both raise and deploy company in Florida.
It does.
Even though we look nationally at companies in New York and other places, but I mean that's sort of, you can't do stuff in Florida. Sure. And let alone Orlando, right? Orlando, not Miami.
As a recent Floridian, it's encouraging, and I know our listeners from Florida will be encouraged by both the ability to raise capital for a fund and deploying capital in Florida entrepreneurs. So you have a fund that you may be launching soon, but for those potential new LPs, why your fund and why now?
Yeah. Let me finish answering your other question first. So because there was a couple of things that we sort of went on. So as we went on and people started to see the types of companies we were investing in, then the circle got a little bit wider, right? And we started to get the people that knew people. The state fund, the Florida Opportunity Fund, has a fund of funds, and they invested in us. We had to reach a certain threshold of size, but then they invested. And then we also added Tim Tebow at his family office as a partner in the fund in 2025. In 2024. And Tim, we met Tim's folks at a family office conference, and I think Tim, he's such a unique person in that, he's very genuine. I would say this, but like he does what he does very genuinely. And it's very specific around the things that are important to him. And I now, a year and a half almost in working with him in his office, like I've never seen them deviate from that, right? So I think what he and his family office liked about us is, no doubt there was a little bit of the Florida tie, right? He still lives in Jacksonville, obviously a University of Florida Gator. And I think he's very focused on, in a sense, his home state. But I think he also saw, although we're not an impact fund, if you look at the problems we're trying to solve, anytime you're working in the government space, to some extent, the companies exist because business or government in and of itself isn't necessarily solving those problems and needs some different solutions, right? So again, we do not brand ourselves that way, but a lot of our companies are doing things that need doing because government can't solve them by themselves. And I think that attracted Tim. And so Tim, obviously, at the end, also brought in a very unique network of people and folks that supported us as well. So and Tim's, and his family office is run by a guy who's experienced healthcare venture guy who's exited some companies. So they're wonderful partners for us, and I think certainly will be involved with us for our second fund. To answer your second question, I think what we have proved in this first fund, because I think the first thing people said was, well, like anything, like where's your deal flow going to come from? Are you going to be able to find deals that make sense? And again, fortunately, because because of our history of being in the center of this, because of the connectivity of our networks, and frankly, because some of our LPs and our strategic advisors and the marketplace, like deal flow is not our problem. I mean, we just see some really interesting, unique things. And I think the fact that we are now known to also lead rounds also becomes a magnet for entrepreneurs coming to us. We have to weed out some more stuff because they hear we lead, so we get a lot more stuff. So I think we've got enough. I think, which is why I appreciate you asking a question about the portfolio company, because as I said, now a couple of years in, you start to see the growth in these companies. Sure. So I think we feel very good about that. We've got a track record in the first fund that in our opinion, the macro market, the macro environment of, I think, on the investment side where there's alpha and upside, but also the role that government at all levels continues to play in the space we play in. Again, maybe it's a little less green energy and a little more dual use technology, right? But so the industries may change, but the thesis in and of itself, we think still has huge legs and huge tailwinds. And if anything, what we want to be able to do with this second fund is to raise a larger fund, probably, hopefully at least 50 million, 50 to 100 million, because we're kind of stopped at Series A right now. If anything, we'd love the ability to still get involved at the seed level and Series A. But if we really see something that, has the potential to continue to at least take pro rata at a Series B. So I think the timing's great. I think valuations are still favorable. I think, again, both the macro thesis and our sub-geographic thesis with Florida are still spot on. And I feel very good about what we can show the market around what we've accomplished in now 2.5 years in Fund 1 that I think can be replicated and expanded in Fund 2. My only regret, as I look at some of our portfolio companies in Fund 1, I wish I would have been able to write bigger checks, right? But you can only... Awesome. Some of that's a little hindsight, but right. But there's definitely checks. There's definitely opportunities where, particularly during the beginning, where we were fundraising as we were investing, and you've been there, right? So you kind of got both windows of the car. You've got both windows of the car open. With a larger fund too, we could probably have doubled down a little bit more on some of the portfolio companies that we would have for sure.
Awesome. So as we wrap up, any final thoughts you want to share with our listeners today?
I would say, because I know you're part of this is for you to talk to potential LPs. Again, I'm obviously a little biased, but I think it is a great time to invest in venture because I think it's been a little bit of a beaten up market over the last few years. And so if you've been sitting on the sidelines, I actually think it's a good time to come back. Valuations have picked up a little bit, but they're not crazy. Even in some of the AI software stuff. I mean, we've invested in several AI gov techs, and I think, the valuations have been pretty reasonable. Certainly ones that we're comfortable. We've been comfortable with. And I do think, as you've seen in some data, I think emerging managers who are very focused, understand the markets they operate in, which, in our case, all of our GPs do. I do think, give a little bit of a leg up. We would not have launched a kind of general technology fund. There are a lot of those, and I think people who might be able to do it better. We really try to stick to our knitting and be able to do the things like we did for our friends at Kind Designs, where we can really have an impact. But again, biggest thing I'd say is I think it's a good time for venture, and we just we really like being in the government space that we're in, because regardless of whether it's Democrats or Republicans, whether we're talking about local, state, or federal, government continues to be the largest spender in a lot of marketplaces. Right. And they're going to continue to be involved in, particularly as rapidly as technology is changing, they're just going to be involved in our innovation economy. And so you need folks that really understand where the headwinds, I'll come back to headwinds and tailwinds again. You need people who can help you understand headwinds and tailwinds are. Great. So where can people learn more about Govo Venture Partners and get in contact with you and your team? So our website is govovp.com, and you'll see all of our portfolio companies there and some of the articles that have been written about them. You can certainly, we're on LinkedIn and X, so you can certainly find us. You can certainly find us there. If someone wants to drop me an email directly, it's simple. It's just rob@govovp.com, and happy to talk to some folks. We're always looking for interesting investment opportunities. Again, our first fund is still deploying capital, so we have some capital. We've got one more capital call, and then we're going to go out. We'll go out to market sometime, hopefully in 2026, with the second fund. Awesome. Well, Rob, thanks for being on the show today. And for everyone listening, make sure you follow
govovp.com, and Rob on various social channels and directly through email. And for all of you listening, make sure you like, comment, share this podcast so we can get the word out and the great work that Rob and Govo are doing. So Rob, again, thank you for being on the show today.
Much appreciated, Scott. Thanks so much.
So I was really shocked at how much government projects and other things are. I mean, it's a rich environment. We keep hearing about all this scaling back, right? And all these things that are lost, but we don't realize how much is actually still in play.
No, Rob really has a pulse of what's happening, with government from a couple of standpoints. One, as a procurement partner, as an investment partner, and other ways. And the reality is government is where everyone wants a government contract because it comes with potentially a lot of money, but it comes with a lot of challenges getting through the government morass. And he has the background to not only provide capital, but to give them guidance and advice to kind of get them to not just funding the company, but procuring those government contracts, which, makes the funding, even valuable down the line.
Right. Well, and I think that the other interesting part is that there's so much, like he's very passionate about the role that government is going to play in the innovative edge of things.
Yeah, I mean, and government always has, you're finding the government, obviously, even to today, by the time this airs, we've been probably a few weeks removed from, the current president considering making an investment in the largest chip company in the U.S., Intel. I think government done right can spur innovation and stay out of the way at the same time. And I think the reality is that Rob understands how to work through that process. And honestly, for companies that are, working with the government, develop products, or hoping the government's going to purchase their, product or service, having somebody who provides capital is great, but having someone provides capital and access and advice is really valuable.
Well, and patience, because you have to understand, they understand what they're getting into. If it's the slight volatileness of change in regime, because they've already been through that in the years of their company, but also just thinking about this model of you may have to invest and you may have to be very patient before everything goes into it, and patient along the way as to all the paperwork and all, as you called it, the morass that you have to deal with along the way. Like, you need someone with know-how, and they're providing that without question because that's their model.
Right. And you have to be patient because the government doesn't, as everyone listening today, doesn't always work at the most efficient level possible. And, all you have to do is to go to your local DMV to understand that. So, the reality is being patient is part of the process that they are very good at helping with.
Yeah. Well, I love that you've been finding such diverse people to talk to. I mean, it's just, one day we were talking about space health and the next day here we're talking about government contracts. So it's just been so diverse, Scott. I think you should give us a little hint about how, there's a lot of emerging managers. Let's remind everybody why you started this show and where it's going and where you feel you are right now, because there's been lots of fun things going on, like our panels.
Yep. It's been really good because I've found that, when we talked early last year, it was an article that came out with virtually 3,300 venture capital funds, and the vast majority of the capital only went to a handful of those funds. And you have all these great managers that provide great value add, that provide better returns, better alpha, and they just don't know how to get in front of the right people. And we've had several cases. We had a case a couple of weeks ago where a wealth manager, emailed me, "Hey, Scott, I've been listening to your podcast, and I'm an LP in one of the funds that you interviewed already. And can you introduce me to this one?" So it's working, which is great. And I have stopped doing my outreach to VCs, and I am just fielding incoming calls from VCs, which is also exciting.
That is really good. And for those of you who, I refer to it as in the can, right? As the old industry term. But Scott and I have tons of these banked up and ready to go. So we are almost all the way through 2 months ahead at this point right now to how we're recording. So just a sign of how very interested this emerging managers market is. So you're going to want to go to emergingmanagerspodcast.com because over there, we not only have announcements as to who's going to be the next guest, like you'll be able to see them, you'll be able to follow them, you'll be able to listen to the podcast there if you don't have a podcast app you love, but you'll also be able to get on the list and be invited to the next time we run a live panel with this group of managers.
We had our first emerging managers webinar, and it was great. We had 4 of our previous guests, and it was just an open conversation, entertaining at parts.
Just in tie into this episode, it did go a little political at one point, and it's kind of fun.
Yeah, I mean, it's we take an apolitical stance, but obviously we're all dealing with human beings here. But it was all lighthearted and all in good taste. So I think as people will be able to watch the webinar and kind of see even deeper, what we're doing with these emerging managers.
So we actually re-aired that, so you can find this in the podcast feed. So if you're new to the podcast, scroll on back and you'll be able to find it. It's labeled special, so you'll know that it was a special and it was a drop-in extra episode. And we'll do that periodically when we have future panels and other special events that we want to air for you so that you don't miss out just because you're a listener and not a viewer. I highly encourage you to get on the list and join us live because then you can ask questions.
There you go. Thank you.
Right.
Awesome.
Thanks, everyone. We'll be back next week with more emerging managers.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.